Okay, hi everyone, and you're welcome to today's video. My name is Diana Olatide, and today we're going to be discussing futures trading. Now, before we get started, I need to quickly clear some things. All right. Now, futures trading basically is meant for professional traders. All right. There's a lot to futures trading, and you really need to know what you're doing before you come onto a futures trading. All right, because there's a tendency to make a whole lot of money in futures trading within a short period of time. And there's a huge tendency rather to also make a lot of losses in a very short period of time. I mean, you can lose the entire budget of a country in just 10 seconds trading on futures. So it's very important that before going into futures trading, you already have a risk management plan put in place that you do your very best to stick to. Futures trading requires a lot of discipline and strategy commitment. Okay, you can't just say you want to just go in there and just quickly dabble in, dabble out. Other people do that, make some small gains and then lose a lot in the long run. Okay, so always make sure you stick to your risk management plan when you go into futures trades. Another thing is if you're a beginner, all right, and you don't know anything about trading or technical analysis or fundamental analysis, your best bet is to be an hodler or go into spot trading. Even if you're an intermediate trader that doesn't have full knowledge on technical analysis, I won't recommend you go into futures trading. Now, with that being cleared, I want to just tell you that another thing you need to put in mind is it's always best for you to have a projection of what your income is going to be like if you trade on futures with back-tested strategies. Always ensure that you have a back-tested strategy that you're trading with. That way, you already know what your risk to reward ratio is supposed to be per trade. You have an idea on your maximum exposure, how much you're risking in total as well. And also, you have an idea on the overall winning percentage of that strategy. So you know that even if you make a couple of losses, the strategy will still get you overall maybe a 60% gain or 70% gain after a set number of trades. Now, such back-tested strategies need to have been professionally back-tested on professional spreadsheets. We recommend you use a professional spreadsheet to back-test your strategies. We have this available on the DASTCI website. Ensure you get yours today. The link is in the description below. Now, let's get started straight into it. Most times when you want to go into futures trades, that means that you must have registered on an exchange that has the futures platform on it. We have several exchanges. We have futures trades that can be done on Binance. We have some that can be done on Bybit. Bybit is an exchange. It's a very good exchange too for futures trading. But personally, I use Mexc for my futures trades. Now, it doesn't mean you have to do exactly what I do. I move. I might use Mexc this month, and next month I might just go crazy about Bybit, and then although it's recommended that you pick an exchange that works best for you. But at the same time, it's not recommended that you hold a lot of assets in just one exchange. Always split your risk across different exchanges. Now let's get started. So to open a futures trade, I want to just use this video to explain how to engage on futures trades. All right. Now here I've clicked on futures. You can see it comes with a drop down menu. By the way, I'm already logged in here. So in the drop down menu, you can see futures overview, perpetual futures, copy trading if you want to copy trades of other futures traders, demo trading if you want to demo trade, which is normally used for back testing your strategies or whatsoever, and also futures events. So to place a futures trade, we are going to click on perpetual futures. Now I want to explain these two things right here. Here you're seeing USDT perpetual futures and you're seeing coin perpetual futures. Now let me quickly explain what that means. For the USDT perpetual futures, it means you're trading a pair against the USDT. So let's say, for example, you want to trade Simpson or you want to trade Ethereum. That means you're trading Ethereum against USDT. All right. But if you are using the coin that means that you're trading a pair against another pair. So let's say you want to trade Ethereum, That means you're trading Ethereum against a coin, maybe like Bitcoin, or you're trading Ethereum against Ethereum itself, or you're trading Ethereum. I mean, if that's even possible, or if you're trading Ethereum against TRX or whatsoever. Okay. So that's basically the difference between USDT and coin. It simply refers to what you're trading it with. So I usually trade against the USDT. I'm going to click on that. And once you click on that, it's going to open up another entire new window for you. Okay. Now, when you're trading futures, it usually comes with a certain level of leverage, depending on the exchange you choose to place your trades on. Some will give you up to 20x leverage. Some will give you just 3x leverage. Mexc, yeah, you can go as high as 200x leverage. On Bybit, you can go as high as 200x leverage. But I personally do not recommend that, okay? Because the higher your leverage, the higher your liquidation. Now, let's talk about liquidation. Liquidation means that your whole entire money in that trade can be wiped off. Okay, so we're talking about liquidation, and I'm there to tell you that in futures trading, it usually comes with a lot of risk. Like I said earlier, there's a tendency to lose all your money, okay, while trading futures. All right, you have to pay attention to liquidation price. Liquidation means that your funds have evaporated, or like you've burnt your account basically. Okay, you're bankrupt in that particular instance. So for this particular video, I want to just quickly explain how to place a futures trade on Mexc. Now, this applies to most other exchanges as well. Once you go to the interface might be a little bit different on the mobile phone, but it's still basically the same thing. You see the order book, you see where you can actually access the candlestick patterns and all of that. And then you have the place where you place your trades. Now, here I have selected isolated. There are different types of futures trades. We have the isolated and we have the cross. Now let me explain the difference between the isolated and the cross. The isolated means that, let's say for example, you register on Mexc and you want to trade futures, you would have different wallets. All right, you're going to have the sports wallet and you're going to have the futures wallet as well. Now for the futures wallet, if you want to trade futures, you can send some money from your sports wallet into your futures wallet. So let's say you want to trade with like $500, you can send your $500 to your futures wallet. All right, now that means that you have a total of $500 in your futures wallet. If, for example, you don't want to take a trade, obviously, if you're a sensible trader, you definitely will not use your whole $500 on a single trade. You would want to split it. So let's say your first trade, you want to start with just $100, right? So on that $100, for example, you can then say, okay, I want to go into a single position. Now, that's where the difference between isolated and cross comes in. In cross margin, because you always see there. So you can't see it here because I already selected isolated for myself here. So, and this is actually linked to my phone. So it might take a while for me to be able to change it back for you to see those two different options. But for now, as I was saying, cross actually means that, let's say for example, you enter a trade with $100. That means you still have $100 left in your futures wallet. Let's say for example that trade goes bad and you get liquidated. It means that the exchange will automatically keep opening an $100 position for you on that trade. So before you know it, you would have $300 left. If that gets liquidated as well, it will open another position for you again. So cross margin means that once it's going to automatically keep deducting from your futures wallet to add to that particular trade for you. All right, so sometimes it works out fine and sometimes it doesn't. Now I personally use isolated because what isolated means is that these $100 I'm using is all I want to risk for that particular trade. So I do not want you to keep removing money from my futures wallet Okay, I just want this particular money to be used for it. So that's the difference between isolated and cross. Now, to place a trade here, it's very simple, but I want to quickly show you something as well. Here you can see we have the calculator, futures calculator. So you can click on it and then you can get to understand where your liquidation price is going to be, or where your profit is, what your profit is going to be like. So let's say, for example, I want to open a short position on BTC. I'm going to have to adjust my leverage. Like I said, never use 200x leverage. I might say I want to start with just 3x leverage, because I like to be very careful about my risk. And so I've adjusted that to 3x leverage. Let's say presently now the price of BTC is at 26,428. So my entry price is, I type here my entry price, which is 26,428. Now let's say I want to sell when it is 25,000 as 25,000. Now the futures quantity, I'm not trading against BTC, so I have to change this here to USDT, right? Then the futures quantity, let's say I'm using maybe $300 to trade this. So I want to calculate my profit. That's why I'm leaving it here at PNL, and then I click on calculate. So here my yield is going to be 16.21%. Just show me the required amount I would need to enter this trade. That means my original margin needs to be $999. That means I need to have $999 to be able to use a 3x leverage to trade this particular parameter. All right, and my earnings is going to be $162 if I actually click to execute this trade. Now let's say, for example, I want to say, okay, what if this trade goes south? At what point will I get liquidated? I can come over here to calculate the liquidation price, and so I would type in the same thing and then click on calculate. So my liquidation price would be, if Bitcoin doesn't go down to $25,000 I'm going to get liquidated if it pumps up to $52,750. Okay, so you need to understand all of that, and those are the basic things right now you need to understand on how to enter a futures trade. So once you see the liquidation price, you can always set your stop loss order to not hit the liquidation price so that you don't lose all of your money. So it's very important that when you're entering a futures trade, you always put your stop loss and your target, your profit target. So here I'm going to click on the quantity I want to trade with. I'm going to use USDT instead, because I'm not trading against BTC, I'm trading against USDT. So here I just fill in the amount of USDT I want, maybe $3,000. And then I want to sell short here. I'm going to click this so that I can put my stop loss, my take profit trigger price, and my stop loss as well. So you can as well do all of that. I actually do take these trades on my phone. So if you scroll down, you would see the places to put your stop loss and your take profits. But what I usually do is I first of all just open the trade, and then immediately the margin gets triggered. That is when I then put the stop loss and the take profits, because the calculation then is more accurate on the exchange. And so I can know, okay, this is how much I would lose when I place the stop loss at this aspect, and this is how much I would gain when I put the take profits in these aspects. Now, that's that about it. I don't want this video to be too long. I'm going to be sharing some more videos on how to place some of these trades as well. I don't know why this is not scrolling down though. It's kind of weird why Mexc is acting like this on the website. But anyways, that kind of explains it. I might as well back this up with a mobile version video later on. But it's really that simple. You can always put your targets here. Maybe my target is 25,200, and it's going to show me, okay, my return on entry is 41%. If I enter at the present rate. So let's say another thing I want to discuss is, for example, this trade is on market. That means that when you place a trade on market, that means that that trade is going to get triggered immediately, like you're entering on the present market price. But if you use these limits here, right here, you can choose to enter the particular price at which you want to enter this trade. So I might say, I want this price to go up a bit. So I want to enter at 27,000 instead of the present price here. And I want to use $3,000 once it's that price. So it's going to execute this trade once the price is $25,000. So that's the difference basically between limit order and market order as well. So if you're acting upon a signal or you want to place these trades on your own, always keep in mind that it's always best to use limit orders. You can only use market orders if you see there's high volatility and you're presently around your entry point. So that's it for today on this video. I hope it has helped clarify some things so far on how to place trades and the basic understanding of futures trading. Hopefully next time we would have more detailed videos, and I would also try my best to do a mobile phone version of this. But however, it's always the same interface most times, you know, and obviously this is not the end of videos on our YouTube channel. We're going to be posting much more videos. So always stay tuned to this channel and be sure to like, comment, and subscribe. It will encourage us to do much more videos like this. Do stay blessed and thank you.